Claiming a tax deduction for medical and dental expenses. To understand what you can claim as a tax deduction, it is important to first understand what is deemed a medical expense. Through the eyes of the IRS, medical expenses are the costs of diagnosis, cure, mitigation, treatment, or prevention of disease, and the costs for treatments or prevention of disease, and the costs for treatments affecting any part or function of the body. These expenses include payments for legal medical services rendered by physicians, surgeons, dentists, and other medical practitioners. They also include the costs of equipment, supplies, and diagnostic devices needed. For these purposes, medical expenses must be primarily to alleviate or prevent a physical or mental defect or illness. They do not include expenses that are merely beneficial to general health, such as vitamins or vacation. Medical expenses include premiums you pay for insurance that covers the expenses of medical care, and amounts you pay for transportation to get medical care. Medical expenses also include amounts paid for qualified long-term care services and limited amounts paid for any qualified long-term care insurance contract. Your medical expenses may save you money at tax time, but a few key rules apply. Here are some tax tips to help you determine if you can claim a tax deduction. You must itemize. You can only claim your medical expenses that you paid for in 2014 if you itemize deductions on your federal tax return. If you take the standard deduction, you can't claim these expenses. AGI threshold. You include all the qualified medical costs that you paid for during the year. However, you can only deduct the amount that is more than 10% of your adjusted gross income. Temporary threshold for age 65. If you or your spouse is age 65 or older, the AGI threshold is 7.5% of your AGI. This exception applies through December 31, 2016. Costs to include. You can include most medical and dental costs that you paid for yourself, your spouse, and your dependents. Exceptions and special rules apply. Costs reimbursed by insurance or other sources do not qualify for a deduction. Expenses that qualify. You can include the costs of diagnosing, treating, easing, or preventing disease. The costs you pay for prescription drugs and insulin qualify. The costs you pay for insurance premiums for policies that cover medical care qualify. Some long-term care insurance costs also qualify. For more examples of costs you can and can't deduct, see IRS publication 502 for medical and dental expenses. Travel costs count. You may be able to claim travel costs you pay for medical care. This includes costs such as public transportation, ambulance service, tolls, and parking fees. If you use your car, you can deduct either the actual costs or the standard mileage rate. For medical travel, the rate is 23.5 cents per mile for 2014. No double benefit. You can't claim a tax deduction for medical expenses you paid for with funds from your health savings accounts or flexible spending arrangements. Amounts paid with funds from those plans are usually tax-free. This rule prevents two tax benefits for the same expense. One important note for the sandwich generation. The cost of adult daycare be a medical expense deduction or a credit. Adult daycare qualifies as a deductible medical expense. To claim the credit either way, you need the provider's tax identification number as well as an accurate total for adult daycare expenses paid during the tax year. If you pay daycare expenses for an adult dependent or a spouse who is physically or mentally unable to care for himself, you can claim a dependent care credit on your taxes. You can claim up to 35% of adult daycare costs for one dependent, as long as expenses are no more than $000. If you paid more than $000, you qualify for a credit of up to 35% of $000,050. The actual credit percentage depends on your adjusted gross income. To qualify you for the credit, The dependent must have resided with you at least half of the tax year. You can also claim the credit if you pay daycare expenses for an individual who lives with you but earns too much money to qualify as a dependent, files a joint return, or qualifies as the dependent of another taxpayer. The credit only applies if you need daycare so that you can work. If you have a spouse or an adult dependent who is disabled, you can count daycare expense as either a dependent care credit or a medical expense deduction. The choice is yours. You just can't use the same expense for both the credit and the deduction, according to the IRS, if you qualify for either. Compare the options to determine which is more beneficial. If you pay 000 for care and qualify for a 20% tax credit, you reduce your tax burden by 0. On the other hand, you can only deduct medical expenses in excess of 7.5% of your adjusted gross income. If you earn 0 during the tax year, you don't get to claim the first $750 in medical expenses, so you wouldn't get a deduction in this example. To qualify for the maximum 35% deduction, your adjusted gross income must be $5,000 or less. The percentage decreases as adjusted gross income increases, bottoming out at 20% for an adjusted gross income of more than $3,000. You must file a joint return if you are married in order to qualify for the credit.